comparison of 2019 tax rates compiled by the Federation of Tax Administrators ranks California as the top taxer with a 12.3% rate, unless you make more than $1 million and have to pay 13.3%. The top 10 highest income tax states for 2019 are: Number 1. California, 13.3%. California has a progressive income tax, which means rates are lower for lower earners and higher for higher earners. This is similar to the federal income tax system. In all, there are 9 official income tax brackets in California, with rates ranging from as low as 1% up to 12.3%. In addition to those income tax brackets, there is a 1% tax on personal income over $1 million. As part of the Mental Health Services Act, this tax provides funding for mental health programs in the state. It functions like a normal income tax and means that the top marginal rate in California is, effectively, 13.3%. That's the highest rate in the US, but it only applies to income earners with over $1 million in taxable income. Number 2. Hawaii, 11%. If you're thinking about a move to the Aloha State, you'll want to know how the state's tax system affects your finances. The most significant tax in the state is the personal income tax. Income earners living on the Hawaiian Islands pay tax rates between 1.40% and 11%, depending on their income level. Number 3. Oregon, 9.9%. Oregon was one of the first Western states to adopt a state income tax, enacting its current tax in 1930. It consists of 4 income tax brackets, with rates increasing from 5% to a top rate of 9.9%. That top marginal rate is one of the highest rates in the country. Only a small subset of taxpayers actually pays that rate, however, as it applies only to single taxpayers making at least $125,000 a year, $250,000 for joint filers. Number 4. Minnesota, 9.85%. State income tax rates in the land of 10,000 lakes are among the highest in the nation, ranging from 5.35% to 9.85%, some of the highest rates in the country. The state's property taxes and sales taxes are likewise above average, each ranking in the top 20 of all states. However, the impact of those rates will vary greatly depending on a taxpayer's income level, home value and spending habits. Number 5. Iowa, 8.98%. Earlier this decade, Iowa enacted one of the largest tax cuts in the state's history. While that cut was largely focused on commercial property owners, it also lowered residential property taxes across the state. Even so, with an effective property tax rate of 1.53%, Iowa's property taxes are the 14th highest in the country. The state's income tax system features one of the highest top rates, which at 8.53% ranks among the highest states. But it also has one of the lowest bottom rates. Number 6. New Jersey, 8.97%. The Garden State has a lot of things going for it, but low taxes are not among its virtues. Homeowners in New Jersey pay an average of $7,840 in property taxes annually, which equals an effective property tax rate of 2.44%, the highest in the nation. The state's income tax ranges from 1.40% up to 10.75%, one of the highest top rates in the country. Of course, if you don't own a home or if your income places you in one of New Jersey's lower tax brackets, the picture may not be so bleak. New Jersey's sales tax rate is close to the national average. Number 7. Vermont, 8.95%. The state individual income tax rates range from 3.55% on the first $37,450 of taxable income, then 6.8% on the next bracket and ultimately up to 8.95% on anything over $411,500. Corporate taxes range from 6% to 8.5%. The sales tax is 6%. Capital gains taxes ratchet quickly up to 9% and there is a punitive capital gains tax on short-term real property gains. Vermont's inheritance tax ratchets up to 16%, so you should think long and hard before dying there. Number 8. District of Columbia, 8.95%. Any person who lived in the District of Columbia for at least 183 days during the course of the taxable year must file a DC tax return, though only if he or she was required to file a federal tax return. The DC income tax consists of 6 tax brackets, with rates from 4% to 8.95%. In addition to federal income taxes, taxpayers in the nation's capital pay local taxes to the District of Columbia. These include a district income tax, with rates ranging from 4% to 8.95%, a 6% sales tax and property taxes on real estate. The district has an average effective property tax rate of 0.55%. Of course, all of these taxes have their own specific rules and exceptions. Number 9. New York 8.82%. For taxpayers in the state of New York, there's New York City, and then there's everywhere else. The state's tax system combines a relatively low sales tax rate, 4%, tied for the third lowest rate in the country, with an income tax system that leans heavily on high earners. Meanwhile, New York City also levies its own income taxes, which means residents of the Big Apple pay some of the nation's highest local rates. Number 10. Wisconsin 7.65%. Wisconsin taxpayers have some of the highest income and property taxes in the country. Menominee County actually has the highest effective property tax rate in the U.S., at 3.78%. On the other hand, the average sales tax in the state, when you combine all state and local rates, is one of the lowest in the nation. If you want videos like this, please subscribe to our channel and press the bell icon so you never miss another video. Thank you for watching and we'll see you in the next one.